And the Nigerian equities market is witnessing a bargain hunting as investors renew interest in banking counters. Analysts believe this sentiment will be sustained. Gbolahan Ologunro, an associate portfolio manager at FBNQuest Asset Management, joins me for a review and outlook of the Nigerian stock market. Gbolahan, thank you so much. Pleasure to have you on the show today.
Thank you for having me.
It hasn't been a bad year for the stock market since the beginning of the year. I believe year to date is still over 30%. And a lot has happened. I mean, if you think about how investors have had to deal with all the macro news, inflation still on the high side, currency devaluation, the swings in the currency market, etc. And then we're seeing where the year to date is. It hasn't been a bad run. But talk to us. I mean, we've had a lot of market news recently. GTCO planning to raise 500 billion through a public offering in line with the capitalization efforts. We have the World Bank approving a 2.2 billion to support, I mean, tying that to the currency markets and, dollar supply, etc. But how are investors processing all of this?
Yeah, so it's been quite an interesting year for the equities market. I think we started off on a very impressive note. We saw broad-based gains across, sectors really, particularly in heavyweight names in some sectors. You look at stocks like Dangote Cement in the cement industry, look at Boa Foods in the consumer goods space, you look at Seplat in the oil and gas space. So a few of those tickers recorded tremendous gains in the first months of this year, and that really propelled the 30% return we recorded at the end of January. However, as the year progressed, we saw a little bit of headwinds that subdued buying interest in the equities market. And I think top of the list would be the news from the central bank regarding new minimum requirements for deposit money banks within the country. So that drove sell-offs within the banking sector. But in recent times, we are now beginning to see renewed interest in banking stocks, which I think we can attribute to two key factors. Firstly, banking stocks are falling to attractive levels. Valuations are steeply discounted, and that has provided opportunities for investors to begin to hunt for bargains and position for long-term opportunities that we still expect within the banking sector. Again, the sector has remained quite resilient over the years, despite broad macro headwinds within the economy. So we think investors are beginning to just take positions in these banking names ahead of long-term opportunities.
It's not too surprising if you think about, if one just, looking at the earnings historically and the last quarter's full year 2023, excuse me, and knowing that with the recapitalization, the strengthening of, their capital base, they'll be able to take on bigger projects. But I want us to leave the banking stocks, so let's go to other sectors. We're talking earlier about Tolaram acquiring a majority stake in Guinness. And when I think about the brewers, the consumer goods, and how inflation continues to impact that sector, the cost of running the business, finance costs, and all of that. What is your outlook for the consumer goods? Let's start with the consumer goods sector. What is your outlook for this sector, and especially those who are tightly linked to the consumer wallet that continues to shrink?
Yes. So the outlook for the consumer goods sector, I think it remains broadly challenging. The headwinds confronting the sector are still quite prevalent. If you look at foreign exchange liquidity issues that has driven up the cost of importing raw materials, you also want to take into account the weak demand from consumers, which has also limited some of these companies in terms of how they are able to implement price increase. Exactly, passing on the spike in cost of production, high cost of operations to consumers in form of higher prices. You also want to take into account the high cost of credit in the economy today on the back of the tight monetary policy stance pursued by the central bank governor in controlling the high level of inflation. So those headwinds will still continue to limit earnings from industry players. But just given the expertise of Tolaram, if you look at what they have been able to do within the noodles industry with Dufil Prima Foods, if you take your mind back to, I think, 5-7 years ago when we had influx of new entrants into that industry, they were able to withstand the intense competition, and they moved on from there even in terms of innovation, rolling out new products with the hungry man size. So investors are also sort of cautiously optimistic that with their experience and expertise in the consumer goods space over the years, they should probably be able to navigate the headwinds within the brewery space as well.
And do you think that some of these companies will be able to, apart from, I mean, the likes of Toleram, others meet the average consumer where they are? We've talked about, I mean, I've talked several times with analysts about the saturation of the economy, where staple, food items like even coke and oil have been made into sachets. Do you think that, I mean, companies are going to have to continue to do that until there's some kind of breathing space, if you will, to move forward?
So just given those broad challenges confronting the sector now, companies have been compelled to implement these adaptative strategies. You mentioned sachetization. We've also seen shrinkflation, which is basically, I mean, reducing the volume of product, but still maintaining the price. So if you have a 33 cl bottle, for instance, you can reduce that to about 30 cl and you maintain the price. So effectively, you've actually increased the price per unit because consumers are now getting fewer volumes for the same price.
The same amount of money.
Exactly, of money that you're paying for a product, right? So these are the adaptative strategies that we think will still continue to remain key themes within the consumer goods space until we begin to see fundamental improvements in terms of FX, firstly, and secondly, in terms of recovering the economy, which you think ultimately should drive increase or recovery in consumer spending.
Right. Well, when one thinks about the issue of FX, we're talking earlier about, I mean, over 2.2 billion coming from the World Bank for the economic stabilization, and I believe we're having inflation out on Sunday this week from the MBS, and I suppose projection is for it to be higher both headline inflation and even food inflation. So you know what? Let's leave the inflation, but let's talk about portfolio. Managers building a portfolio at a time like this. We still have the higher yields at the fixed income market, which, I mean, obviously it's very appealing to investors. So those investors who are at the market right now, institutional investors, what is the book of play? What is the investment psyche right now? Stay the long term, position in banks that we know that in the next 24 months, when they get those monies, they're able to take on bigger projects. Where else do they stay, in terms of buying cheaper re-entry points to position for bigger profits?
Yeah, I think if you look at sectoral performance on a year-to-date basis, the banking sector still lags relative to other sectors. So the sector is down by about 7%. If you compare that to consumer goods, although fueled by just, I mean, BOA Foods. If you look at the oil and gas as well, the cement industry, they are all in double digits, I mean, return level. But the banking sector, just given, I mean, that regulatory requirement from the CBN, fears of dilution has been the key driver behind the weak performance within the sector. But looking ahead, we think there are opportunities, especially for long-term investors. Right. And if you look at institutional investors, PFEs, they should have, I mean, a forward-looking view about the equities market. And we think, I mean, if these banks are able to mobilize this required capital, the size is quite substantial. If they're able to mobilize it, it has a transformative impact on their balance sheets, and we should see that translating into better earnings in future years.
Right. What about the telecoms guys, Airtel Africa, MTN? I mean, the numbers, I mean, outside of the Naira, the dollar issues or drama, I mean, what is your outlook for the telecom sector? I know they're still pushing for higher tariffs. Governor, it's that chicken and mouse game between the government and all of that. But where do you see in terms of more investments coming into the telecom sector, and how they handle that, not getting the tariffs, cost-reflective tariffs that they believe is required to move the industry forward?
So we think investment will still pretty much be centered on, I mean, core infrastructure that will drive the ability of these telco operators to continue to drive internet penetration, broadband penetration, rollout of 5G sites. MTN has already kick-started, I mean, that initiative with the rollout of 5G sites, particularly in Lagos, Abuja as well. So we think that investment will still pretty much be centered on the core infrastructure that would facilitate the service of those telco operators. All
right, so we'll leave it there, Gbolahan. Thank you so much for talking to us today. Pleasure having you on the show. Gbolahan Ologunro, Associate Portfolio Manager at FBNQuest Asset Management.